We are now going to bring in our guest, Scott Bauer. He is the CEO of Prosper Trading Academy. Scott, welcome to the show. Thanks for having us. I think we get right into kind of an update on trade talks, on the semis. I just saw SPX sold off about 20 points. Bounced back about 10 points. I'm not sure if we're looking what the news actually is that came out on that. I don't see a news headline, but let's talk about Cisco, that being really the laggard on the semis this morning, and what you're seeing in Cisco.
Yeah, my coworkers are looking here also, Stephanie. We're all kind of chatting each other what just happened and don't know what that sell-off was all about right there. I'm sure it probably had something to do with tariff talk. But, you know, when you look at Cisco, which had a downgrade from Goldman Sachs this morning, and some of the other chip makers, you know, it's hard to think that these things will get any sort of tailwinds without some sort of deal in place with China. Especially you look at Cisco here, and for a couple years or so, it had really trended from a technical standpoint along both the 200 and then the 50-day moving averages. Those had put in some really good support in this stock. However, just a couple months ago, I think it was late July, maybe early August, Cisco had some bad news, and it has not recovered since then. In fact, a lot of traders, a lot of people talk about golden cross, death cross. That's when, the 50 and the 200 converge, and on the way down, it's when the 50 passes down below the 200. Well, that just happened a few weeks ago. That is a pretty bearish sign here in Cisco, and I don't know. I don't love it. I don't love it.
Yeah, that death cross, I am not the technical analysis like you are or Ben Lichtenstein is, but that technical analysis, that death cross is definitely kind of a scary sign, and like you said, bearish. And so to see Cisco down as much as it is compared to a lot of the other semiconductors, which have been doing relatively well so far this year, actually really well, even though there's been no resolution on the trade front. So Scott, as this kind of plays out further into the day, I'm guessing, do you have a different take other than if it's optimism? Is there room for the semis to still run higher?
Yeah, I think a lot of the negativity and a lot of the caution about growth is probably priced in at this point. I think what could further hurt some of these stocks, a la a Cisco, maybe even a Micron, is if the gloves really come off and they walk away from these meetings over the next couple days, and basically they just say, listen, we're going to let this thing play out, right? I don't see that as happening. I also don't see them coming to a meeting of the minds and coming to really any sort of resolution. So I look at this and I think there's probably some downside. I would say that there's not a ton of downside. Cisco, to me, though, out of all of the big ones, really looks the worst off to me, though.
Okay, yeah, that's good. Thanks for the commentary on Cisco and the semis in general. And I just want to mention, how about, what are your thoughts on the move that we saw, which was a big significant move in rates in the treasuries this morning, with the TNX popping, the 30-year popping, and bonds coming off pretty significantly for really what the bond trend has been so far this year up until the last couple weeks?
Very significantly, and to show you how sensitive that market is, Stephanie, over the last 15 minutes, as we're looking to see what the sell-off in the equity market is, you've actually seen the flip side in bonds over the last 15, 20 minutes. So, it is as sensitive to the trade talks as the equity market is. But, like you said, this was a huge move. To see the 10-year really, get out of the kind of muddied traffic that it was in, the sideways trading pattern that it was in, and see bonds sell off and the 10-year to tick up, and now it's anyone's guess at this point. So I would expect volatility to continue. You have this trading range in the 10-year of really about 145 or so up to 175. I know we've got some outliers, beyond that, but that's really the range that we have stayed in over the last 3 or 6 months or so. And it certainly looks to me like, there's nothing, barring any sort of truce, that's going to get us out of that range.
Yeah, good. I think the key takeaway, I love that you said it, what we all know, is the market is very sensitive. It's very sensitive to any type of tweet, any type of, even if a word comes out. But again, that is, we got to pay attention to bonds, where rates are, semiconductors, known sometimes as a leading indicator of the economy. That's why we talk so much about semiconductors, and also they have such exposure to China. But Scott, I want to thank you very much for joining us today on the show. Again, Scott is the CEO of Prosper Trading Academy.